What is up, guys? Taiki here. Welcome to the market update for May 23rd. We have a lot of topics to cover today, but before I get into that, let's first discuss this video. Now, thank you guys. I have a lot of people reach out to me saying if that was okay. Now, I made this video as a joke. So I'm like guys, I'm okay, okay? Like I got hit, obviously. I lost roughly 7% of the portfolio, which sucks, right? But you know, I think I did okay, like managing risk and whatnot. And the reason I made this video is, you know, instead of making like one of those videos that everyone else is making about like risk management, diversification, all that, right? I feel like you guys are adults, right? Like we're all adults here. And I was like, you know what? I'd rather like make something fun, right? Hopefully make someone smile during these treacherous market times. And yeah, like, and just talk about like how everyone's feeling right now, right? Maybe not everyone, but I feel like for most people, everyone is experiencing these thoughts of like, is crypto okay? Is DeFi safe? Like, is it even worth the risk? You know, like we're all becoming boomers, right? Like we're withdrawing money from like Aave because Luna imploded, right? But Aave doesn't become more risky after Luna implodes. Like that doesn't really make any sense. It's irrational thinking, but you know, as humans, it is irrational to, you know, it's like the fight or flee response, right? Like you're just like, you know what? Like I can't take this anymore. Withdraw my USDC into fiat. Just stick with it for like 6 months and then come back later, right? So I expect choppy markets, but you know, I'm here to stay. Don't worry, I'm not wrecked. I'm doing okay. Definitely lost money, obviously, but no, I survived. I survived, right? Everything looks grim right now, right? The yields are down because price is down, and we're all left pondering like what is the future of crypto? Like what have we accomplished in the past 12 months? But you know, I just want this channel to be forward-looking, right? We can talk about the past and be like, yeah, like, no, it sucks. Like, you know, I got scammed, but you know, the best way to, you know, keep growing as a person, I think, is to learn from your mistakes. You know, be humbled when you are humbled and prioritize making it to the other side. Because I think there will be the other side. It could be in 2 months. It could be in 10 months, like 2 years. I don't know, right? I don't have a crystal ball. But my priority right now is to figure out, okay, how do we manage risk? How do we farm? Where do we, you know, place our bets? And is it even worth placing our bets, right? So that's kind of going to be the focus of this video. And yeah, just like learn from mistakes and let's get to the other side, right? Let's figure out where the puck is going, because that's all that matters right now, right? Like the past is the past and we live right now. We live in the present. So not financial advice. Let's get right into it. So let's talk about the implications of Luna, right? Imploding. And I know there's a bunch of, you know, like the Terra 2.0 stuff and like there's like a bunch of conspiracy theories, but you know, like hoping for Terra 2.0 to revive Terra is, you know, being in that camp is similar to like the camp that still believes Wonderland is going to come back right after the whole Seafood Gate thing. It's just very, very unlikely. I mean, there's a non-zero chance, but you know, there's a lot of zeros, right? 0.0, yeah, there's a lot of zeros. But I think the more important thing to consider is the implications on the rest of the market, right? Like Luna, it's gone, right? So let's like, how does Luna affect the rest of the market? And it's quite significant because Luna was a top 10 coin, and a lot of people liked it, including myself. And I know I drank the Kool-Aid and I became too complacent. And as it collapsed in a matter of days, people are hit with the realization that anything in crypto can go to zero. Now, a lot of people predicted Luna going to zero, right? And those are like valid points. And obviously, you know, different projects have different tokenomics, and you know, some things are less likely to go to zero and whatnot, right? But the fact of the matter is, the market right now isn't too rational. We're still trying to recover. Like the entire market, right, is trying to recover from this. There's like a bunch of funds that got wrecked. There's individuals that got wrecked. And risk appetite is lower than it's ever been, right? I like my market outlook is that I think Bitcoin is going to outperform ETH, and ETH is going to outperform alts. So if you want to take on risk, I think Bitcoin is the best, and the second best is ETH. Of course, there are going to be one-off altcoins that are going to pump, but generally, I just think Bitcoin and ETH are going to be the safer assets to, you know, buy if you want to add more exposure. And I'll share some data that leads me to believe that, you know, I think Bitcoin is going to be the safer bet. And sure, like crypto DeFi is kind of scary, but you know, moments like this, it makes you like really appreciate Bitcoin, right? And the credible nature, the neutrality of Bitcoin, the decentralization of Bitcoin, and partially for ETH as well. When I entered the space, I entered crypto as a Bitcoin maxi, and then I was like an ETH maxi when I discovered DeFi. And over time, right, during the 2020, 2021 bull market, I was forced to change my views and I guess like catch new narratives and trends and whatnot. But whenever these moments happen, right? This was the case for May of last year and also today. It's like every time these crashes happen, I just like appreciate Bitcoin more and more. During the bull market, I was taking profits from like Avalanche and Phantom to like Bitcoin, and I was like underperforming with my Bitcoin. I was like why am I even selling these things for Bitcoin, right? It's like a boomer, like this orange ass boomer ass coin, but it just really makes you appreciate the anti-fragile nature of Bitcoin, and I feel like the rest of the market feels this way as well. And if you think about the risk appetite and the general market psychology of people in this space, I don't really know how to best explain this, so I'll just give this example, right, as a concept, right? So don't get too focused on the ticker or like the numbers, but this is a general concept, and I feel like this is like the best way to, I guess, illustrate how market participants, their risk appetite is changing, right? And it like happened immediately. So let's say before the Luna collapse, like what was the odd? What were the odds of Solana going to zero, right? I mean, depending on how bullish or bearish you are Solana, right? Maybe, let's just call that X. It doesn't really matter, right? Let's just call it X. But the fact is, after Luna and USD, the entire situation happened. These odds, right? X, like those odds of these other altcoins failing, right? Potentially going to zero, increased by some order of magnitude. So let's hypothetically say X is 0.0001%, right? So it's like what, 10,000th of a percent, right? Maybe this is too optimistic, right? But like don't get too caught up in the numbers. But after the Luna event, like maybe X, right? The odds of Solana failing went up by 100x, right? From 0.0001% to 0.01%. And if this is going to be the case, then people are going to be really forced to look back at their portfolio and be like, I was really bullish this coin, but can it make it to the other side, right? Is the team well capitalized? Like, are there any fundamentals backing this thing? And it really just makes everyone, right, just look at their portfolio and just heavily de-risk, whether people de-risk in the Bitcoin, Ether, stable coins, it definitely happened for me, right? Like when UST like started to lose its peg, I just like knew it was over, and I was like, like all these altcoins just can't take it, right? I'm just gonna rotate into stable coins, and do all that stuff. So with that in mind, we're all forced to approach the markets in a different perspective and talk about certainty and uncertainty. The altcoin market, so much uncertainty, right? Like we have no idea what's going to happen. Sure, you can bet on winners, right? You can have your thesis and whatnot, but we really don't know what's going to happen. I feel like the only certainty that is in the crypto markets right now is that, at some point in the future, Bitcoin and Ether are going to hit all-time highs. And Bitcoin and Ether are the two assets that are the most likely to survive, right? And I feel like you kind of have to have this mindset in crypto, right? Because Bitcoin like leads from bear to bull, and when Bitcoin enters a bull market, then everything else follows. Bitcoin is kind of like the barometer of the health of the markets, and at this point in time, I just feel like a lot of altcoin rallies are going to be sold into either stablecoins or Bitcoin. And if you think about people that currently hold cash, is it more likely that those people buy Bitcoin or Ether versus like altcoins? I just think that most capital flows are going to go into Bitcoin, and it's probably going to be some accumulation period. I don't really have price targets, but I don't really have to have price targets as long as I have a way to manage risk and like farm and whatnot. So that's going to be where I'll be focused on. So I feel like you kind of have to have this bias of just Bitcoin being like the safest crypto asset, and just being naturally optimistic Bitcoin and Ether, because whatever happens, we have these cyclical cycles, and Bitcoin will lead us out of whatever phase we're in. So let me kind of give a more tangible example of what I mean, because I know a lot of people, or maybe some people, they just think altcoins are a huge discount right now, and I'm sure they are, right? I mean, I'm sure in like 24 months we'll look back at this moment and we'll be like, yeah, I wish I bought that coin at that price. Like that's ridiculous, right? But we don't actually know which coins are going to be the leaders coming out of the next phase. And I just think that from a risk management perspective, the best thing you can do is to just focus on Bitcoin and Ether. And once those assets recover, you can then place your bets, because at that point, whenever that is, it's going to be more clear who the winners are going to be, right? So there was also Tether went to 94 cents, right? I mean, this is peak fear. And it was weird because I took the screenshot, I think Friday, and on Thursday, Tether was I don't know, it's some price, and I was okay, I'm gonna sell a bunch of USDC into Tether, right? I made a couple $100, and the next day, I'm earning, I could earn 40 what is 49% on Aave on Tether. Obviously, this is like down to like 6% today, but this really kind of shows you like the level of fear, right, in the markets right now. Like whenever people like start selling Tether, right, that's that's usually like the end of like the initial like fear phase, if that makes sense, right? It's like a good barometer of like retail capitulation, I think. But anyways, I think Bitcoin is likely to outperform, and Bitcoin needs to show strength before new narratives can form. And here's an example. So I think one of the strongest narratives in crypto last year, coming out of the May 2021 crash, was Avalanche, right? Avalanche, I think, led altcoins out of the bottom. And, I've experienced like Avalanche, Phantom, like Luna, like DeFi Kingdoms last year. But I feel like Avalanche in August and September, the level of euphoria around that time was unmatched, right? It was unparalleled. But let's talk about this. So this is the chart for Avalanche Bitcoin, right? So the price of Avalanche divided by the price of Bitcoin. And we see here that this chart bottomed on July 28th. Okay. So July 28th was the best time for you to swap your Bitcoin for Avalanche to give you like the best returns, right? And now this is a chart of Bitcoin, right? And the Bitcoin bottom, right? At least the local bottom where it started like GigaChat, right? And put in, what is that, like 2, 4, 6, 8, 10 green candles in a row. This was July 21st. July 28th, when Avalanche Bitcoin bottomed, was up here, right? So it was only after Bitcoin put in 7 straight green big candles that Avalanche Bitcoin was finally able to say, okay, like it's on, right? This is our time to shine. Let's start, outperforming everything. So the point is, Bitcoin has to bottom first and show strength in order for the altcoin markets to, have more confidence, right? Because it's not enough for Bitcoin to, put in like a 10% candle, right, over the course of 2 days or something. It just really has to show like obvious strength, right? And I would argue that, Bitcoin in late July was obvious strength. And this was the catalyst for other altcoins to really outperform, led by Avalanche. And as Avalanche outperformed, then, Avalanche outperforming was a sign that, the alternative L1 trade is still on. And then Solana, Phantom, Luna, like all those coins like really did really, really well. So, I just think that altcoins are just too risky right now. Sure, you'll look back in 24 months and be like, yeah, like, easiest 20x ever or whatever, right? But even if you're highly convicted on a coin, it might make sense to let the dust settle even further, right? Because if you go back to, I guess, Q1 or Q2 of last year, like I was farming on Polygon, I was like buying all these like random coins, the number was going up, but I didn't really know what Avalanche was, right? I mean, I knew about Avalanche, right? I knew it was EVM, I knew the founder and whatnot, but I never touched it, right? And I bet like none of you touched Avalanche prior to like August, right? Like I even thought Avalanche was a scam in like February 2021 when it like pumped from like $2 to like $60 over the course of a month. I was like, what the hell is going on here? But the point is, I feel like it's best to focus on Bitcoin or Ether, right? If you want to take on risk, and the best time to buy alts is like when Bitcoin shows strength. That's kind of the point. So, and also in terms of patience, I don't necessarily think that it's the best thing to rush into the markets right now, because I'm only taking a few data points, but whenever we have these capitulation wicks, and I would characterize mid-May, right? What we had a couple weeks ago to be a capitulation event, right? Whenever we have these wicks historically, at least in the past like 3 events, whenever these wicks happen, sure, there's a bounce, but it always tends to revisit those lows, right? So right here, right, we wicked, we bounced, and we revisited those lows, and then we started pumping. Same here, right? Dump, bounce, revisit, and then go up, and then dump, bounce, revisit, and keep going down. So, I feel like even if 25.8K was the pico bottom, I don't really see a reason to rush into the markets. And if you must get some exposure, it should be in the majors, right? Bitcoin and Ether. But it also depends on your time horizon. Like, if you're DCing into the markets, like chances are 12, 24 months from now, you'll be happy at like whatever prices you got in at right today. But if you care more about, feeling better about your buys, like timing your entries and whatnot, then maybe I think it's fine to relax, right? I don't think we're going to recover from here. I think you're going to have time to, pick your bets. this is the time to do research. This is the time to maybe take a break, right? Go on vacation. I don't think it's a good time to just completely leave the markets. And if you must leave the markets, maybe check up on it like once every week or so, right? Yeah, because there's a popular saying like bull markets make you money, bear markets make you rich. You don't want to buy like shit coins in a bear market because they'll just go to zero. But if you are able to do research and identify winners, then that's where the most gains are. That's where the gains are made, right? So let's go over what I'm doing, right? I have like a pseudo DCA / farming strategy that I think is pretty interesting. And I've talked about this asset before, right? GLP. But I really like this farm. I just think it's a really good farm right now. Yields will go down because, trading volume is going to go down. But these yields are organic. I think the fundamentals are there. Can it go to zero? Of course. Can it have an exploit? Of course. There's always smart contract risk. So I'll say that up front. But I'll share my reasons on like why I think I'm personally fine with risk and what I'm personally doing with it. So I have this strategy of dynamic DCA, right? Dynamic weekly DCA. So this is with the idea that I don't know when the market's going to bottom. It definitely feels like it's going to go lower right now, right? The sentiment is pretty bad right now. But, if I'm earning yield on my assets, I care more about time in the market than timing the market, right? Whatever. So I'm focusing on doing 1% buys from stablecoins to GLP per week. If the markets go down a lot further than anticipated, then I might buy more, right? So obviously I'm going to buy less as the prices are higher and buy more when the prices go down. And if Bitcoin needs their bounce, put in a significant bounce, I might sell the GLP I've been adding or hedge my position, right? And if you want to know how GMX and GLP works, I have 2 videos, right? Hedging strategies, DCA strategies, farming strategies. It's all there, right? If you want to learn about this, educate yourself here. I'll touch on it, but I'm not really going to go over how it actually works. But TLDR is that when you buy GLP, you're buying these basket of assets, and you're being a liquidity provider for a leverage trading platform, right? So you're essentially being kind of like a market maker in that sense. And the weight of GLP is like this. It's like 50% stable coins and 50% volatile assets, mainly Bitcoin, mainly Ether. And on Avalanche, right, the other asset is Avalanche. And on Arbitrum, it's Chainlink Uni and those assets, right? So I took these screenshots last week. So it's a little outdated, but I think Avalanche right now pays like 50% and Arbitrum is like roughly 40%. So whatever fees the protocol generates, you actually earn them in the native gas token. So you're actually being paid in AVAX on Avalanche and ETH on Arbitrum, right? And you also get escrow GMX. I'm not going to talk about escrow GMX, but I like the GMX protocol. I think it's interesting, and I'm just doing it on Avalanche because in order for you to vest your escrow GMX, you need to have capital deposited. So I've been an active GLP provider, so I would much rather earn ETH right now than AVAX, but I'm just gonna farm on AVAX just so I can get my escrow GMX vested, okay? And in terms of escrow GMX, this is the distribution of it, right? Per GMX staked, per GLP on Arbitrum and Avalanche, it's actually gonna start going down next month. So I'm like, okay, even if I think the market's going to go down, I don't really care. I'm just going to slowly DC into it, get my share of escrow GMX, and hopefully, this project actually survives, right? I don't know if it's going to survive. There are risks, which I will talk about, but that's kind of the mentality. And also, right now, let's just say that the APR for ETH and AVAX is roughly 30%. And it's been 30% 4 months ago, or whatever, right? When prices were not nuking. But this is actually more impressive because obviously these APRs are paid in the token, right? So if the token price is going down, but the APR is relatively stable, that means that you're actually earning more tokens, right? Because that's how math works. So I just think it's pretty impressive that the platform is still able to generate these APRs. It just shows that there's still a lot of volume to be had. There's a lot of volume in the past couple of weeks. That's why these rates are so high. I expect them to go down starting next week and whatnot, but it is what it is. And this is trading volume and the fees, right? It's actually generating cash flow. There's a good incentive mechanism between the traders, GLP providers, and GMX stakers. I think that's pretty neat. And this is on Arbitrum. Yeah, this is on Avalanche, this is on Arbitrum. And I'm not going to go over this, right? But feel free to pause it. There's no impermanent loss. And how are the APRs calculated? Answers are here. This is from a mod from GMX. And what happens when traders lose or make money, right? Where does the money go to, right? So it goes over there. there's the risk that like if a bunch of traders make money, it comes out of GLP. So if a bunch of traders just like make a bunch of money all at the same time, then there's a chance you could lose money. But all the data shows that traders on average loses a lot of money. On GMX, like everyone loses money. Well, not everyone, but a bunch of people lose money on average. So I'm comfortable with the risks taken. But like, what if a whale comes, right, and like YOLO trades? Because I think the liquidity on Arbitrum is like 200 million, right? So like, what if some whale like comes with like 100 million, like just dumps it on there? I don't know, like some YOLO trades. Like what happens in that sense? So the mod was able to specify that the biggest risk, right, the most catastrophic thing that could happen to GLP is if a bunch of people short and prices go down, right? Because if prices go down and traders like make money via shorting, then that means that not only is the GLP price going down, right, because the assets within the basket is going down, there is capital being extracted from GLP because traders are making money. So in order to mitigate that, they're putting a cap on how much you can short per ecosystem, and I'm not really sure how they calculate that, but there's a cap on that. There's less of a cap when prices are going up, because yes, traders can traders can make money on the way up, but if you're a GLP provider and prices are going up, right, the basket of currencies are going up, so it's less of a catastrophic event. There's always risk. There's nothing that's like risk-free in crypto, right? As we've learned, something that's like something that's yielding 5% is a lot riskier than something that's yielding 10%, right? You pay for the extra yield with units of risk that you're taking. But for me, I'm just comfortable taking the risks because I've done my research, and you have to do your research, right? I'm just simply providing an example of a decent farm, right? It's 50% stablecoins, 50% Bitcoin, Ether, and AVAX. I get to earn decent rates, farm a token that could potentially appreciate in value. I'll take it, right? In this type of market, I'll just take that, right? I'll just DCA into that. If you're kind of scared about the risks, then you can go to tricrypto. It's a similar asset. With my outlook that I think Bitcoin and Ether are going to perform at 33% exposure into Bitcoin, 33% exposure into ETH, and 33% into stablecoins, yielding roughly 10% on Avalanche and Phantom. I think it's pretty attractive. It's roughly 15% on ETH mainnet if you use Convex. So if you have like more capital, then maybe that's worth it for you. But I think those two farms are the most attractive right now. It's not exciting, right? But I'm not really here for exciting right now, right? I'm just more here to survive, here to manage risk. And if I am taking on smart contract risk, then I'm really going to do research on how well is the team capitalized, like have they been audited, and like what are like the tail risks that we have to consider. So let's kind of talk about that, right? I think, I really wanted to cover this because there's like so many like rugs and exploits going on right now. And one of the examples I saw was Blizz Finance. This is a money market. It's an Aave fork on Avalanche, and they had Luna listed as collateral. And as the price of Luna was tanking, the Chainlink oracles weren't updating, so a malicious actor could have purchased a bunch of Luna at like a millionth of a penny, deposited it into Blizz as collateral, and because the Chainlink oracle had Luna at 10 cents, they could have deposited like $10,000 worth of Luna, but the system, I guess, recognize it as like $10 million, right? So if you had $10 million worth of collateral, then you can take out like $7 million worth of like stable coins, Bitcoin, Ether, whatever. But because Luna is so low in price, once the Chainlink oracles update, then the system is broken, right? The application is broken, and if you had assets deposited as collateral, or if you were lending your assets on Blizz, then you just can't take it out, right? I mean, there's nothing you can do, right? It's crypto, nothing you can do. And in their postmortem, Blizz said that they don't have a treasury, right? They have no money, and apparently the team members also had their funds in it, so they're gonna leave, right? They're done with the project, and if you had capital in there, I'm sorry. I think they had some Luna that they're gonna distribute to people that lost money, but it's like if you get back $5 and you had like $1,000, doesn't really make you feel that good. And the point here is that in the bear markets, there's gonna be more risks. There's gonna be more risks when it comes to anonymous teams, because devs need an incentive to work on their application, right? And if their token is down 99.99999%, then what's the incentive for the dev to keep working on that project, right? And if everything is down only, it increases the likelihood of rugs and exploits. Yeah, and a lot of DeFi natives, myself included, assume that most exploits and rugs, well, I mean, rugs are obviously inside jobs, but a decent chunk of exploits in crypto are inside jobs, right? Because if you have an anonymous team, so let's say Blizz, right? I'm not accusing them of like an internal exploit, but if there was like an anonymous team, right, and they knew that the project was never going to recover, right? The token is like going down and they don't have a treasury of stable coins. They only have their own native token and their treasury is worth like $1,000, right? It's like really not worth it for them to continue. But if they're anonymous, they can be like, oh, the Luna Oracle is down. Okay, so let's make a new wallet, use Tornado Cash, drain these funds and tell our community that, there was a malicious actor, right? But there's no way that we can, as a community, can navigate or figure out whether or not it was an inside job. There's nothing we can do, right? So, I mean, obviously, maybe someone can figure it out, but it's for most, it's not really worth your time, right? So there's always that risk. And I think in these times, I think it's best to stick to proven protocols, even if the yield is lower. The best ones are, if they have VC backing, right? Because if they're VC backed, then the team is doxed to the VCs at least, right? If not publicly. And or they've gotten ecosystem grants, because if a project receives grants, then it's likely that they have doxed and Ava Labs or something, or whatever ecosystem vetted the team that they're not going to rug or something. If they're VC backed and they have received grants, then they raised fiat and stable coins or Bitcoin and Ether to keep themselves going, right? So even if their token goes down 99%, they still can pay themselves and operate. That's the most important thing right now. So, you might be wondering, wouldn't that be a risk to GMX and GLP? And yes, right, the team is anonymous. But if you dig in, I have reasons to believe that it's going to be okay, right? I mean, I could be wrong. I have no idea, right? I'm scared about smart contract risk as anybody at this point, right? But I'm willing to put my capital in there. So, do they have capital? Yes. During the bull market, they were able to sell some of their escrow GMX at a discount and raised almost $2 million. And they said that, this is enough to last them 18 months, right? So 100K burn rate, run rate per month, right? In terms of their treasury assets. And also I'm sure the team has tokens too. So, they can keep themselves going. It's not the most reassuring thing, right? That the team has 18 months. I mean, 18 months is a lifetime in crypto, but generally, if you're funding a startup, if you're putting money into a startup, you want them to have at least a few years of runway. But it's crypto, right? This is all you can do. And the team has also been shipping continuously for the past many months. So, logic, common sense tells me that they have money. They're working on a quality product. It makes sense how it's designed. I feel like if we were in a bull market, I would put a bunch of money into this thing. So just because we're entering this bear market doesn't mean that I shouldn't allocate capital into this. But you have to consider these things, and you really have to be careful about where you're placing your capital. Me personally, I have most of my funds on Aave and stuff, just because I just don't want to deal with random forks. I'd rather earn 2% on stablecoins on Aave than 10% on stablecoins on some Aave fork on Phantom or something, right? It's just how it is. So that's going to be in this video. But before I wrap it up, I'll just quickly touch on DeCentralCon Austin. So I've never been a speaker at a conference, but I will be one for Decentral Austin from June 7th to the 8th, I believe. June 7th and the 8th. So yeah, I'm a speaker right under Charles Hoskinson. So if you're coming to this, I'm definitely gonna be buying mushrooms and gifting Charles, not the magic kind, but the regular shiitake mushrooms or something. So if you're coming to this, I think everyone should bring some mushrooms, and then we can take a picture with Charles together. I think it'll be fun. I've never met him actually. A lot of people think I hate Cardano. I don't hate Cardano, right? I'm actually pretty open-minded, right? I just kind of meme about it because it's kind of funny. But anyways, I'll be there. You can use the code HumbleFarm for 30% off if you're interested. If you want to show up or if you want to check it out. I think Consensus is also the same weekend, the same week. So maybe we can hang out. I'm sure it'll be recorded, so you don't have to come. But it's been a while since, or whenever I go to these real life events, it makes me remember that like, oh wow, like human interaction, kind of nice, right? Just because we live in this digital world, like I work from home and whatnot. So yeah, just feel free to use the code for DCentralCon Austin. Yeah, I think it's gonna be a bunch of like Cosmos people actually. So thank you guys for watching. That's the end of the video. Hopefully this opened up your mind to, I guess, GLP, tricrypto, hedging, DCA strategies, farming strategies, how you should be thinking about DeFi crypto right now, because I understand times are scary right now, right? I totally empathize with that. But just because Luna imploded doesn't mean that like Aave and Curve are going to go to zero, right? It could mean that other things can go to zero, but it's not like like the blue chips of the past are now like going to go to zero. It doesn't really make that much sense. But I think the concept of avoiding anonymous teams and those projects, unless they're like heavily vetted or like audited, makes sense. It's important to focus on how much capital each team has, because if they run out of money, then like what are they going to do, right? Like they have no they have no incentives to work on it. So GMX, strong enough team from my opinion, well capitalized and pretty good yields. So if you ask me, like I would much rather put my net worth into tricrypto than GLP, but I'm not putting my net worth into GLP. So if I'm developing a DCA strategy, felt like a nice way to do it. It's hard to find farms right now that are attractive. So earning yield in the gas token, right, whether it be AVAX or ETH, and also earning GMX, which I think is a pretty interesting asset, right? I really like the tokenomics. I don't know if it'll work, but it's something attractive to me. So thank you guys for watching. Have fun farming out there, and yeah, have a good one.